Hi class, this video is the second in a series of videos on balance day adjustments, and this video is going to focus on a specific balance day adjustment called accrued expenses. So if you're a little bit unsure about what a balance day adjustment is, it might make sense to look back at a previous video on prepaid expenses, which goes through a balance day adjustment and what they are. As a quick refresher, balance day adjustments are all the adjustments that we do on the balance day before we make our reports to make our reports more faithfully representative of what is happening in the business. If we bring it back to an accounting assumption, we need to follow the accrual basis accounting assumption that says we must identify all the revenue earned and expenses incurred in a period, and sometimes we need to recognize that all the information that we've got is not perfect and we need to record some things that we've missed. And these are the adjustments that we do. So what is the learning intentions for this video? I hope that by the end of this video, you understand the need for balance day adjustments and specifically accrued expenses. You understand what they are, and the success criteria would be if you leave this video, and particularly after doing some questions, you understand how to record the general journal entries for accrued expenses. And importantly, which is unique for this one, you understand how these are how this impacts subsequent periods when payments are made. So what is an accrued expense? An accrued expense is one that has been incurred, but has not yet been paid within the current reporting period. So we've actually used up something, an expense has been incurred, but we haven't paid it, and maybe even not even got a bill for it. But because we've used it up in the period, we should report it in the period. An example is in this one. A business has paid a total of $3,200 for cleaning expenses during the current reporting period. But on the balance day, the owner discovered that an invoice for $300 plus GST for cleaning done in December has not yet been paid, and let's just assume not even been received. So the temptation is to just report as an expense the $3,200 that we've paid. This is the bit that we've already recorded. But we haven't met the accrual basis assumption if we don't recognize there actually is an accrued expense that has been incurred but you're not yet paid, which is the $300. Now this is actually a really common transaction that we need to do an adjustment for. Other examples include wages. Companies often owe wages on the balance day because we only get paid maybe every 2 weeks, and we've done a lot of work as employees within those 2 weeks. Could also involve advertising, like a company has paid $800 but owes $200 more, or electricity. You might not have received a bill when it comes to the balance day. So lots of things that are expenses that we incur, but we might not necessarily have paid by the period, and we need to do an adjustment for. We need to understand it's necessarily to adjust our ledger accounts via the general journal so that this occurs. We need to understand and adjust these to accurately show the amount that has been consumed. So hence the amount consumed in the period needs to be added to the expense account. We need to record how much of the expense has actually been consumed in the period. And because we have not paid it, but we owe someone something, we need to create a current liability called accrued expense to show the amount owing or unpaid. A current liability because there is something owing. So this is the adjustment that we need to make. So let's go back to our example. The exact same example we talked through for. We have $3,200 of cleaning expense, but the key bit here is on the balance day, the owner has discovered that an invoice for $300 has not been paid. So what is the expense incurred for the current reporting period? I recommend pausing the video and having a think about this. How much expenses of cleaning expenses have we used up in the period? I hope, after I'm pausing it, you can accurately say, actually there's been 3,500. We've paid 3,200, but there's also this $300 that we haven't paid, but we definitely used up in this period. This is what we call the accrued expense of a liability that is $300. So on the balance date, we need to do an adjusting entry. On the balance date, the amount of the expense not yet paid must be added to the amount already paid to determine the total expense for the period, which we'll accurately report in income statements. We don't want to understate our expenses because that's going to overstate our profit, and we might make some silly decisions as businesses if we overstate profit. So the adjusting entry in this case would be as follows. On December 31, because that was our balance day, I'm going to report $300 additional cleaning expenses. Cleaning expenses is the expense element, and expenses going up is a debit, as we know by Paler, and we need to record this additional 300. I also need to record a credit, and my credit is the part of the balance day adjustment where I create the liability. Our liability is accrued cleaning expense, which is a liability. Liabilities increasing are credits. We know a narration is always required, and this is a balance day adjustment. So the narration is going to start with adjusting entry, and we're going to say for cleaning expenses owing. So if it's wages, it might be adjusting entry for wages owing or advertising owing. We don't need to say the amount because it's clearly defined in the numbers. So how do we report this in the balance sheet? As some of the cleaning expense has not been paid, but we've added it to the cleaning expense account as part of the adjustment, we actually have a liability. Some of the thing that we are owing has not been paid. This is a current liability reported in the balance sheet and will look like something that we'll talk about later. What do our ledgers look like? And I apologize, I stuffed that up a little bit. What is the general ledger impact of accrued expenses? The accrued cleaning expense liability, this is the liability ledger, will have an entry that didn't exist before. Our liability is increased, so we have a credit and it has gone up by $300. The cleaning expenses account is going to show now that we have $3,500 of expenses, and it will be closed off as normal. So we've already paid $3,200, so hence the cash at bank $3,200. Expenses going up are debits. But we've also going to record the extra $300 cleaning expense that we've done in this adjustment, and our cross-reference here is accrued cleaning expenses. Because this is a expense account, we're going to send it all to our profit and loss summary to report in our income statement, and this now nets off because we have closed this account essentially to start again. So in our income statement, we are going to report as an other expense $3,500. How does this work in the balance sheet, as I started talking about before by mistake? The accrued expense, the bit that hasn't been paid, represents a present obligation of the business. Present obligation is the key word that you need to talk about when talking about liabilities. We have a present obligation that needs to be met within 12 months. No business is going to let you not pay that amount owing within 12 months. Think about wages. You're not going to hang around as an employee in a business for more than 12 months to get paid. So the obligation must be met within 12 months. Hence, it's a current liability. That would be reported on the balance sheet on balance day as a current liability. So we'd have a new current liability called accrued cleaning expenses. So anytime you see the word accrued, you know we're talking about liabilities, and we are saying that we owe $300 more of liabilities of cleaning expenses. That might all seem pretty simple. all we're going to do is recognize what we owe, make a liability, and record an increase in our expenses. The complication of this balance day adjustment is the next period. We need to make sure that we don't penalize ourselves in the next period and overstate our expenses because we've already recorded an expense here. So in the previous example that we've been talking about, we know that there are $300 owing on balance day. Let's say on the 7th of January, we get our invoice and we pay $500 of cleaning expenses. Why 500? Because clearly we've done some someone has done some cleaning for us from the 1st of January to the 7th of January because business keeps going. This amount that we paid included the $300 that we owed. So we're going to record this in our debits and credits in our general journal, but we need to be careful. We've already recorded $300 of this as an expense and created a liability. Clearly, after we pay this $500, we don't owe this liability anymore. This has been fixed. So we don't have $500 of cleaning expenses as a debit here. We only have $200. $300 of this reduces our current liability of accrued cleaning expenses. We have no more liabilities that we owe to this cleaning company. So the cash that we pay, $550, credit, asset going down, is split up by reducing our liability, accrued cleaning expenses, an increase in new cleaning expenses, $200, reported in this income statement, and because we have paid GST, this reduces how much we owe to the government. So once again, we have two ledger accounts affected, and we need to just make sure that we don't penalise ourselves. Our cleaning expense account now is just going to recognise $200 more of expenses, and we paid them by cash. Our accrued cleaning expense liability account no longer has a zero balance because we've fixed up that liability owing. And guys, that is how you record a balance day adjustment for accrued expenses. Can you now complete some textbook exercises and really practice so you become a master at recording general journal entries for the actual balance day adjustment and subsequent periods? A really common question. If you see an accrued expense question in an exam, you can almost guarantee it'll involve a subsequent period as well, and become experts at understanding how this impacts ledgers, balance sheets, and income statements. Now's the time to really practice and become an expert at this particular balance day adjustment.